Welcome back. Welcome back, guys, to Trader Hive. First of all, I'd like to say it's been a while since we've been live and online. So, we're back. We're going to be doing more of this. We're going to jump through every single chart you can think of. You can drop some comments and drop some analysis you'd like to see in the future, and we will do them anytime. Right. So, today, we're going to have a look straight up at Crash 500. That is our main goal today, is to completely break Crash 500. It is probably one of my favorite charts on the Deriv lineup for reasons of it's easy to trade, or easier to trade, and it's also not too hard on the account, right? So with that said, we always have to practice, and I preach, you practice, I preach, and I practice to have some good risk management, all right? Never, ever overdo your account. I was just on the phone with a friend of mine who's too deep on some trades, and when it's too late, it's too late. You can never take it back. Well, you can. Come back, camera. It's not time to sleep, it's time to get going. So, let's get back. Right. So, first of all, this is Crash 500's chart right here. I would like you guys to know that what I'm going to show you today, we're going to have a look at the technicals from the top-down analysis, as well as taking a look at what we can see over the next coming few days to weeks for Crash 500. Okay? Simple stuff. Not so simple, but we're going to go through it like it is. Let's take a look at the chart. We're on the 4-hour right now, and that's where I like to start my top-down analysis on Crash 500, and we can work our way down from there, right? So let's take a look at 4-hour. We have seen basically an up and down zigzag. It might look, if you're new to trading, you're new to Deriv, this may just look like a zigzag pattern, but damn, gonna get tricky. So what we're trading here, Crash 500, I'll give you a quick briefing of what it is. If you don't know what it is, we'll go down to the 1-minute chart, and this is where you can see it quite clearly what it really is. So this is called Crash 500 for a reason, because this is what it does. It crashes. And with Crash 500, or with any crash chart, we're going to be getting a spike towards the downside, right? So a spike instantly downwards. And because it is Crash 500, we are getting a spike or a crash every 500 ticks on average. So this chart itself, you will be getting an average spike every 500 ticks. It's faster. You'll get more spikes than if you were trading on Crash 1000, because you're only getting one spike per 1,000 ticks on Crash 1000. So with that said, we have more spikes coming from Crash 500, and Crash 500 is not so leverage heavy on your account. So we end up having a better trading situation. But for me personally, if you've got a smaller account or you want to trade responsibly, Crash 500 is a good place to be. Crash 1000 can really take long for those spikes to come, and Crash 300 might be a bit too heavy, but the spikes come really fast. So Crash 500 is a nice in-betweener, and I like to play on Crash 500. Really, I do. So with that said, let's go back to the 4-hour chart. We're going to start with our top-down analysis all the way down. So we were supposed to do the stream 2 days ago, and we were sitting right at the bottom over here. As you can see, this analysis right here with a trend line was sitting on this support. And I thought we were going to be able to, see the range play out, but it didn't. It broke through. So that's when I decided, let's wait a day or two before we do the stream. So on the 4-hour, we can see this range playing around, and it broke through. It broke down. So it crashed straight through the support. I did think it was going to come up again. It looked like it wanted to, but I don't specifically buy against the spike. There are some people that do. It's its own strategy on its own. You can either play to find the spikes, or you can trade against the spike, and that's consistently stepping towards profit, and hopefully we don't hit a spike that takes out all of our profits. So remember, guys, with Boom and Crash, always play it safe, play responsibly, and try and be as good as possible at risk managing. Just because you had one good trade doesn't mean the next one's going to be perfect, and there are no guarantees in trading. You always have to have your own back, always be on your toes, and always think ahead, be responsible, and trade like a champion. That's how we like to be, right? That's how we like to be. With the Trader Hive, we learn to stick to our rule set, we learn to stick to our strategy, and we stick to the good rules that keep us safe, and we keep our accounts safe. I will give a couple of those tips as we go along through the stream. So I want to see who's on. Have we got a few people here? We've got a few people chatting. Is anyone chatting up today? What's up? Are we alive? And you guys can drop some questions if you like as we go along here. Right, you like trading on the 15 minutes? 15 minutes, we'll get there. We're going to start on the 4 hour, and then we're going to go all the way down to the 5 minutes or even the 1 minute. Right, Mr. Coins, welcome. Tenancy, hello, welcome, Tenancy. Roxy, hello, Roxy. Right, awesome. Let us move on and have a look. So from the 4 hour, as I was saying, we had this breakdown that happened. So when you're getting really, really low, it's kind of like you don't want to be trading crash 500 on the lows, right? We don't want to be playing around the zone. So what we do have here is an opportunity to do some charting and actually do some analysis, which we're going to do now. So the 4 hour broken out, we could possibly see in the short term a retest and then a breakdown. So this can possibly come up to here, retest this now new resistance level, and then crash downwards. So this is something to watch out for. This price area right now is around, it's not at any neckline, so I won't be suggesting it, but I will put this zone over there. That's a nice place to look at a crash area. If it does retest and it does carry on the downtrend, then that's something, that is a zone to look at. About 3,980 to 4,000, somewhere around there. But these charts change all the time. You cannot say now that in 1 day's time that's going to happen. Charts change all the time. By the hour, the analysis is changing. By the hour, strategy is changing. So keep an eye on it. Make sure you're always on your toes, ahead of the game, and thinking clearly with your rule set. So let's zoom out 4 hour all the way out and take a look at this major trend that we have here. So major trend, okay, nothing to really, I wouldn't really count this as anything that we want to look at right now. However, it is playing in this range. So this is a very big range. This is over days, if not weeks. So let us keep that in mind. What's up, Cody? How's it going? So if you guys want to see some more analysis, ask me what you want to see on Crash 500 specifically, or if you're confused of anything, please just shout. So this one has broken out, and I don't like it. I don't like where we are sitting right now. I like to be sniping Crash 500 on the highs. So we don't want to be low down. We are low down currently. We're low down on the major time frame, and we're low down even on the hourly. We're low down on everything. We've broken out low. So it's not a place to be looking for spikes. But we have the opportunity now to plan ahead, plan for our next move, and plan for what we are waiting for. And that is probably 80% of trading, and that is waiting for the right time to strike. Not just trading because you want to, or trading because you think you need to, but actually trading and waiting to trade is the most important part. So from the 4 hour, we're going to go down to the 1 hour, and we're going to play this range that we see right here. Even though it is a low range in terms of the major trend, we are going to play with this range. So first option on this is to wait for the retest of the new support, which is now a new resistance. Okay, it's an old support. And then we have the next level. So I like to call them points of interest, POIs. So points of interest that we do have, and we can just go ahead. Most people think that you can just, let's open a trade. We can do that. We can do that. Give me a moment. We're going to first do the paper check. We have to check what's going on the chart before we open a trade. I wouldn't say that I would open a trade right now, although we could get lucky. But I don't suggest trading at these levels on Crash 500. Although, if we do go down to, say, the 15 minutes, which is a more local trading time frame to work with, for right now, it is what I would say is overbought. So it's at a higher level for the current time frame. I wouldn't say it is the best place to enter, but we can definitely do it. I will be trading on a demo account, and I will try and open a trade for you guys. So let me do that. Look, there's a trend line. Let's just say that we're going to work with this. Okay, cool. We're going to work with this trend line. There is a point of interest over here. There's a neckline as well we're working with. Here we go. It has broken out. There is confluence. Where's the next neckline? Right there. It's a bit higher up. So I suppose you could end up going for... This is an entry zone. For now, let's say. This for now, just for that. For the sake of Crash 500, for the sake of breaking the chart, let's try it. So let's go over to our MetaTrader 5. If you don't know what MetaTrader 5 is, and you haven't used MetaTrader 5, it is a platform that you can use to log into a trading account and open trades with Deriv. If you haven't seen what we're doing, if you don't know what Deriv is, go down below and check on the links down below, and you can click on the link to sign up for a Deriv account. It's free. You can get a demo account where you can play with free money and practice and hone your skills. Remember, guys, trading like a champion on demo does not mean you're going to go do amazing things with a real account. There are emotions involved. There is your everything involved, your mindset, everything included. That is all part of trading. So be aware, because you're a champion on demo does not mean you're going to be a champion on a real account. I do suggest playing around on a demo account for if you are new to trading for quite some time, and then start working with real money and getting your emotions in check and locked in, baby. So for now, let's start looking at, we are at a point where I think we could probably just enter something for the sake of entering, but I don't suggest trading at these levels. Still, I don't. But I'll enter the minimum lot size, 0.20. That is our minimum lot size for Crash 500 and also Boom 500, as well as Crash Boom 1000 as well. Yeah, you can check down below and in the top above here, traderhive.co.za. Go there, check out. We've got so much stuff. We've got a bunch of indicators. If you see what's happening here on MetaTrader 5, I've got some indicators here that tell me where my support and resistance are. I've got candle timers. Candle timing is something that's super important. Actually timing your times of the candle closes and opens, it really helps. So a candle timer helps to monitor when the candles are going to close, especially on the higher time frames like the 30 minutes and the 1 hour. Something interesting. We do have a free download section on the website. You can go download these indicators, drop them into MT5, and get rolling. So they are there for you guys. There's a bunch of other stuff as well you can take advantage of. So go ahead, jump onto traderhive.co.za. So right now, I'm not happy with this trade. I don't like it, but I do have enough capital that it's not going to hurt me to just enter a trade, and hopefully we can get a spike. So with that said, I'm not going full in. I'm not going hard. I'm not trading this very seriously, but I'll do it for the sake for the stream. So Cody wanted me to, he said, let's open up a trade. Why do you want to open up a trade, Cody? That's how you get in trouble. So tell me what you want to see. So this breakout, you can see it's actually retested this little breakout, and it is pumping on its way up. The next point of interest is this neckline over here. So we can actually drop down a limit there and a limit there. I like to get a good average entry when trading on any boom and crash chart. So I like to, not just enter one big position. I like to enter a few smaller positions and get a very good average entry. It's a nice way to spread your risk over a zone and get a better entry price. Right. So if we want to, we can move back to the 1 hour chart and see here that we're going to just translate what we did on our trading view charts. And we're going to have a look here and see, okay, we have to look for this retest. This retest is going to be good, to be honest. Let's take out a Fibonacci level. Let's see if we can find anything. 38.2. Is that a 38.2, or am I doing it the wrong way around? Probably am doing it the wrong way around. Let's go the other way. There we go. So the 61.8 is looking so good right now. That is the area that we want to look at, right? So 61.8 is always the place to be on the Fibonacci. So this neckline over here is looking really popular. If we go back and we have a look at our other chart, I'm going to remove all of this because it's a bit of a mess. I'll remove this as well. So this is that is for sure a retest on that. I'm cool with that. And we're going to go take the Fibonacci of this long. There we go. I think it's this one, right? Okay. So 61.8 is up here. It's quite high. Although that area is also a good point of interest for me. I do want to calm this color down. It's a bit color. It's like pride in here. Okay. Right. So this point of interest right over here, that is a point of interest for me, the 61.8 zone. It can be one way or the other, but this 0.382 is also a popular level. So as you can see, it's smack bang in the middle of the zone I gave us earlier. So this zone over here is a popular zone. I do think it'll reach that level. I don't think we're going to get the spike now, and I don't think the stream is going to hang on long enough to see this trade run itself out. But if you want to join in, get your demo account, go down below, click the link, sign up. You can get a demo account probably set up in 5 minutes, right? Get logged in on your phone, get MetaTrader 5, or you can get CTrader as well. We have links down below for CTrader, Deriv X, whatever you want. Go down below, get your account, sign in, and start playing on this chart right now. So you can join the trade with me and mark out your entries, just how I have, if you'd like. So this area right here is looking super good. I am going to move up these entries right now. I do have an entry in. We're 50 cents down, guys. 50 cents. 50 cents down. And I'll put one just after that zone as well. I'll remove the Fibonacci for now because it's a mess. I don't like mess. So, if we are going to wait for this to play out, most likely going to end up, where is our take profit going to be? Now, this is kind of my way of doing this trade is where am I going to stop and where am I going to take profit? So if this trade happens to go bad or it goes too far, where am I going to cut my losses? And if the trade does work out and it does turn nicely, where am I going to take my profit? So if we are going to be taking a loss, which we don't want that, of course, but sometimes it works out better for you if you take your loss when you know it's a bad trade and you walk away. You'll spare yourself emotions, you'll spare yourself some money as well. If we are going to take a loss, we'll watch out for it running through all of these limits and past this last point of interest over here. Right? If we do make it past there, I'm going to start thinking about taking the loss, because that means that we have surpassed and gone past this area of like the rejection point or our reversal point. So again, this is very messy. We are working on the fact that this is going to retest and come down. Okay, remember that we always have to work with some buffer, some liquidity, right? And there's always stop losses to be taken, and there's always traders that need to be washed out of the market. So there's never a deadline that we can call, that's where we're going to stop. There's always going to be some overrun, there's going to be a wick, there's going to be a little bit of a push before it goes your way. And this goes for any market and any chart. We're going to be watching out for that. So you can see that this zone just falls slightly low, just below this area right there. So I think that we could end up just running through this and popping off just over here. That's a nice place to look at it. So if it does run up, I'll be closing. And I'll be waiting for the next zone, which is going to be higher up. Okay. Now, if we want to look at where we're going to be next, if this fails, I'm going to be looking at somewhere up here. Let us look around this zone. Why? Because we're running with history here. We're watching these charts, we're watching these peaks, and I don't think we're going to get there. I think that this is going to reject first, and then we're going to come lower. We're going to come down to this major trend before we consolidate around this area, play in the zone, right? There's going to be a play zone right here, and then later on in life it will go up, right? So let's watch something like that. That's what I can see. You can see how it goes up and down. It's going to do the same thing over here. It's like a heart rate monitor. So we've had the crash. It's given us something. We've got some profits. We've got 50 cents, guys. We've got 50 cents profit. So this is where it gets tricky. We can either take our profits now, or we can just leave it in and hope for the best and let it roll up and catch these other limits and play the whole trade out. Or we can take the profits now, re-enter later, which I'm going to do. I'm going to re-enter again. So that is just a nice rule that I've picked up over the time. Take your profits when they are there and re-enter always. So this avoids holding onto trades for super long, and also catching yourself out where you've actually got into profit and then your trade ends up reversing and going into loss, whereas you could have taken the profit and then re-entered as you go back in. So yeah, just a little bit of common sense can do you a lot. Let's go back to our trading view. Can you use FVG on Crash 500 fair value gap? Nice trade. Well, it was 50 cents. I can buy some chips. So FVG fair value gap on Crash 500. If we're talking about the same thing, then it's going to be yes, you can. Although these charts that we're trading on right now do not have volume, and they do not have trading. They do have volume, but they don't. It's an algorithmic chart, so it's not a volume-based chart. There's not people putting in money on the market which moves it up or down. It is an algorithmic-based chart, which means it's run by an algorithm. It's run by a computer code. Okay, it's run by, I would say, most likely AI. And AI is getting smarter these days, so these charts have got to be smarter. But I've got to somehow break this AI chart, for sure. We're going to be ending up with a super smart chart that's going to just like destroy me. I don't know. What am I going to do? What am I going to do if these charts become so smart that I've just become irrelevant? I don't know. But if we are going to be watching out for fair value gaps or liquidity areas or areas where there's a lot, I would say a lot of stop losses. Let's talk about stop losses, right? So if you want to trade responsibly, usually you'll enter your position, you'll pick your risk reward, and you'll set down a stop loss and you'll set down a take profit. Now, that's all good, but what happens when there are a lot of stop losses in a specific place? Most likely, and this goes for Forex, this goes for crypto, this goes for algorithmic charts as well, the AI in this chart is going to want to get the stop losses. Same within the market. There's market makers that want to get to those stop losses and liquidate positions before it goes the other way. And this is simple trading. It's simple trading. In fact, it's not so simple. People don't understand it sometimes, but that is what happens. And usually, it's never going to be a point-to-point trade. So let us say this. I will say this. This point right here, most people will come onto this, oh, look how easy that is. It's just going to go and it's going to go straight up to that point over there and it's going to crash. Most likely you will get a spike there. But there's a guy that's placed a trade in there, and he's placed a trade there, and he's put his stop loss just above there, right? He's just above the peak, and his take profits there. What do you think is going to happen? It's going to go slightly above this peak. It's going to go slightly above this point of interest, and only then will it spike. It's going to take a stop loss, you're going to take a loss, and then it's going to come down the other way. A lot of the time, if you run with a stop loss, it'll get taken if you put it in a very predictable place. But when we're talking about fair value gaps, we're talking about liquidity zones and areas, we're talking about using this area as our advantage. So if we want to trade this, and let me actually just remove all of these trades out here so we can actually plot out something for you. So if you want to place a trade here, and this is where you want to get on that peak, it looks perfect, it's on that line, It's dead on, right? It's perfect. Nothing can be this perfect ever. And you put your stop loss here. No ways it could touch that, right? No ways. But little do you know, this market and these trades and these traders and the volume behind it and the AI and the algorithm are going to just pop through a little bit, and they're going to take this. They're going to take your stop loss. And then over here, or maybe up here, it's going to come down. And you know what? 2 hours or 3 hours later, it'll come down and it'll come past your entry point and go into profit. Whether or not your account could have handled that is up to your balance. It is up to how much you risked. It's how big your position was. But at the end of the day, trading the fair value gap in the liquidity zone is going to be all about thinking about that stop loss area. If there are 1,000 traders entering on this point, which they probably are, and let's say 90% of them are putting their stop losses here, tight stop loss, and whether it is a market maker, whether it is an AI algorithm, it doesn't matter. Those stop losses are super attractive. Those stop losses are great for anyone other than the trader. So those areas, those liquidity zones, are going to be where the liquidity is picked up. It's going to be taking out stop losses. That is where people make money. That is where the sellers are making money. The buyers are making money at that point, because they're buying all the sell-up contracts that are liquidating and stop lossing, right? That is the technical term in Forex and finance. And on this one, it's waiting for you. Those stop losses are waiting to be hit. So where do we want to enter? We do want to enter because if it does go here, then we're going to be left without an entry. But if we don't enter, we'll miss it, right? But if we do enter, it's too early. Or we could reduce our risk size completely all the way down. Okay, we use minimum lot size, and we can enter how many times? That depends on your account. If you've got a $300 account, you can enter 3 positions at 0.02. Just for example, we can use that, right? We can use this minimum lot size, we can enter 3 positions. And that is a good risk management for this trade. I'm happy to put that hypothetically. So we're going to cover the stop loss area. Wherever you think there's lots of stop losses, we're going to be entering our main positions there. So let's go and put 1 over here to cover if there's an early break. Okay. And 2 more entries right above here to cover off the stop loss area. And we're going to go straight through the stop loss area. Now we're covering the actual entry zone. We're covering the stop loss area, and we're covering just an extra little bit. Now that is called covering our liquidity zones, that covering that fair value gap. What happens is a lot of the time it'll come through, take the first one, it'll drag, it'll hit where we think the stop losses are. There'll be 800 people who get their stop loss hit, and then it comes spiking down, and all 3 of your positions are in profit. So that is something that you can do, Cody, is go and check that out. Paper trade it if you need to. Go and watch where you would enter and where you would put a stop loss, and go put a line there. Just literally put a line up like I've done on TradingView here. Just go put a line, a hypothetical line there. Okay, you can go put it there, boom. And that is your imaginary stop loss line where you think you'd put a stop loss. And watch how it goes through that point and just past it, and then it wicks down and comes back. You can try this on any market. You can try it on Deriv. Again, down below you can get your link and get to the Deriv website and sign up for an account. Start playing on demo. You can trade on real, you can trade Forex, you can trade crypto, you can trade algorithmic charts on synthetics. I love it, synthetics. I love my Crash 500, right? So with Crash 500, over the past, it's been years now, it's been 6 years, 7 years, I've traded this more than any other chart, I think. And I love it because it works for me. It works for me. It suits my style of trading. Everybody has their own style of trading. Everybody has their own way of doing things. I like Crash 500 because it's got a decent amount of spikes. I don't have to wait all night for the trade to come through sometimes, and it's not too heavy on my account. You can trade it with $50, and you can trade it with $100. Although I do suggest, having a larger balance to trade with and risk manage well. The bigger your balance, the more you can risk manage. If you only have $20 in your account, you're kind of at full tilt the whole time. Whereas if you have $20,000 in your account, you can really play around without risking too much from your account. So, thank you, Cody, for that. How do I stop overtrading? Take your hands, put them under your butt on the chair and sit on them. That's how you do it. If I were you, I would set up a proper rule system for if you're overtrading and you're getting the bite and you feel like you're trading too much and you're taking a few losses and you're getting out of control. I would straight up set yourself some goals as to or points that you need to watch for before entering any trade. So if you are going to be overtrading too much, you're going to say, let's set up some questions before you start trading any trade. Let's use Crash 500 for example. Is this trade in a good sell zone? Is it high in price? Right? Is it high in price? And that answer is on the 15-minute, yes. On the higher time frame, no. So this is a mixed batch. This is a mixed one. I would say that this is not in the zone. Like as I said earlier, this is not in the ideal place to be trading it. So no, this is not a trade that I want to do. That's already red flag number one. Not to trade on this one. I don't want to trade on this one, right? Number two is this a risky trade for my account? So how much balance do you have? How many trades have you lost today? How many trades have you won today? Is this a good day for you? If it's a bad day for you, you had a bad day, leave it. If you are trading well, you've got your confidence up, it's also something to be aware of, that you're not getting overconfident, and then you get yourself into some trouble. Go ahead and try to decrease your risk if you're overtrading. Decrease your risk completely. Use like half the amount of trades that you're putting in, or entries, or risk lot sizes that you're dropping. Pull that all the way down. And then current market conditions. We know that it's low. We don't like this area. How's your day been so far? And then what else can we say? These are the three questions you're going to ask yourself before taking any trade. That is, what time do you have to go to bed? How much time does this trade, is it going to take? Right? So if it is 10 o'clock at night and you want to start entering this now, bad idea, buddy. You're going to be here for another 6 to 8 hours watching this come up, spike, consolidate, come down a bit. That's tomorrow morning. You're not sleeping unless you've got balls and you want to actually like put in the trades and leave it overnight. Or you've got a big account and you can do that, that's fine. But if you are not and you are overtrading and you're new to this, definitely don't be entering trades where you're going to be going to sleep in 3 hours or 2 hours, whatever. So something to be aware of, sleeping patterns, and also think about, where are you going to take the loss? I want you to always remember, where should I take a loss on this trade? Think about that, and also think about where you're going to take your profits. What is your risk to reward? Always, the TradingView has it here. We can go short position here. We can go and put down. Let's use this for an example. Where's your take profit? It's there. So that's a 1 as a 2. It's a 1 to 2 ratio. It means I'm risking 1, and I'm rewarding myself 2. So it's a 1 to 2 risk reward ratio. Sorry, my tongue twisted. It's all right. It's not too bad. Although that take profit is not exactly realistic. I think it's probably going to be here. So we had a 1 to 1, which is not good. I wouldn't say it's not good. I just think it's not good. It's not enough for me to warrant putting my account on the line to go and trade this. So take profit versus your stop loss, or even more, if we're going to be layering into this, we've got a 2 to 1, the opposite route. So this isn't a good trade to be in. So if you can go and use this rule, right? how much am I risking versus how much am I going to get out of this risk reward, versus as well, what time am I going to bed? Have I had a good day? And are we in the place to actually sell? So like if we are up here, for example, let's say we're up here and this thing's peaking out right over here. Let's use this old candle for now. This looks so sick, right? I'm happy with this. We have got huge potential here. And a little stop loss. 1-to-6 ratio. We can do that. 1-to-6 risk reward. No problem. You know what I'll do? Even at 10 o'clock at night, I would enter a position here and put another position there, and I would leave it overnight with enough balance so that even if it did continuously ride all the way up, I'd be fine in the morning because I know that that's going to go down. So always measure your risk to reward and make sure you go to sleep at the right time, because there's been many nights where I haven't gone to bed for sure because I'm watching a trade and you get caught off guard and it goes and it goes and it goes forever, and you up the whole night battling trades. So what makes Crash 500 different from any other chart is it's got higher leverage, so you can actually enter more on your account. Leverage isn't always a good thing. It is a great thing if you want to make money and you want to trade. Like you've got like 1 to 1,000 leverage or more on Deriv. Some forex charts and accounts, you know, you'll get less than that. But at the end of the day, forex and crypto and everything with leverage is a dangerous thing. It can give you really, really good rewards, but it can also give you really, really big losses. So it works both ways. It's not like you're going to be getting amazing results. And there's a lot of people that post these results, good results in trading, but we don't know how many times that dude has lost all of his money like previously. So we don't know. Don't be baited by guys that post up green screenshots making a lot of money. It's not the way to deal with it. It's not a realistic approach. It's a probability game. This we have to risk reward, and you know what? Over time, you're going to lose trades. It's inevitable in trading. You're going to lose trades, and you're going to lose, and you're going to make a stop loss, and you're gonna mess up sometimes. And you know what? We just have to win way more than we lose. Simple. And we also have to risk way less than what we want to get rewarded with. And that's simple. Then you're winning. If you are risking less than what you want to get rewarded with, and you're winning more than you're losing, you are in profits. Always. Just simple maths. So keep that in mind. So again, with synthetics, I like synthetics. I like the Crash 500 because I can trade this all the way through the weekend. It's 24 hours a day, 7 days a week. We do not play with, as I said earlier, we do not play with volume and like the normal like forex markets and the crypto markets. This is a tick-based algorithmic system. It goes and it goes and it goes and it goes, guys. So it never stops. It continues to go. It continues. You can see here. Let's zoom right in on the 1 minute, and I'll show you guys what I'm talking about. So here is a nice zoomed in position on Crash. You can see our price over here is just ticking away, tick, 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 tock, right? Keeps on going and going and going. Because why? This is a tick-based algorithmic system, and for every tick, every second, it's like saying there's going to be one of these big-ass spikes every 500 seconds. Okay, so with that said, I think that there's going to be a spike soon, but I don't think that we're going. You can always catch a quick spike. It's like you can always make a quick buck, sure. But when you want to really trade this like a professional, you want to trade this like a big boy, and you want to be serious about this, go ahead and zoom out a little bit. Take a look at the 1 hour and the 4 hour. Zoom yourself out. This is quite overboard on this. These candles are looking nice, for sure. You could probably get a spike on that, but if you want to play properly, I'm going to be suggesting playing in this area where we are actually high up, retesting on something, and we have some fundamental basis in technical analysis to play with. That is your solid base. Technical analysis on synthetics is the way to go. We don't deal with news impact. We don't deal with Trump tweets. We don't deal with any of that. It's purely technical analysis and your mindset and liquidity zones and fair value gaps. So go ahead and do exactly what I've told you tonight. And that is just think about where you want to enter. Make sure you're going to bed at the right time and put your rules in place and have your risk management set. You don't want to be caught with pants down on any synthetic chart, let alone any chart at all. So do yourself a favor, set out your rules, Cody. Tendency, number 1. That's it. Trader Hive, we are number 1 this year, man. We're on it. We've got so many things to come. I've got a few plans for the next stream. I think we're going to be diving straight onto the candle timer. Like I've said it for the past 2 to 3 weeks, we've got to do the candle timer. We've got to find out why candle timing is so important, especially on Deriv. Well, because on a forex market or a financial market, you've got the volume that plays it, and those candles are they're gonna close according to the volume. The volume can change within a second, but with this, the algorithm has to plan how those candles are going to form. So look at that candle, right? 15-minute candle. This one's closing in 4 minutes. I think there's going to be a spike before the 4 minutes is up, because this will give us a reversal and that'll give us a spike with a nice wick on the top, just like it did over here. Look at that, right? You see what I'm saying? Now it is important to see why the candle timers are important. 4 minutes until a spike comes. It just gave us a mini spike. Did you see that? You can't make this up. It's high up. I think we could get a spike now in the next minute or two, and then I'm going to call it a day. And I'm going to say goodbye from Trader Hive. Remember, guys, if you want to play around on Deriv and you want to get into this, you want to learn how to do this, come and join me. Come chat to me on Telegram. Come chat to me wherever you can find me. All my links are down below. We have it all there for you guys. I'm here every day. That's what I do. I'm checking the charts. I'm trading. I'm doing Trader Hive. I'm chatting to people. I'm teaching people. This is what I love to do. So get in touch with me. We can get a hold of me and we can talk. We can talk charts. If you're new to this, you don't know what you're doing, I'll guide you from the beginning. I love it. I love to go from the beginning. So go below, check out the links below, and we will catch you on the next one. So stay alive, stay with us, stay live with Trader Hive, guys. I'm not going to wait for the spike to come through, but I do think it's going to happen. Have a good one. We'll see you next time. Ciao for now.